opened up my E-Trade account to start trading options, but I haven't gotten approved yet.
Cancel that account. Get a better broker.
Big thanks to FreshBooks, the super easy to use cloud accounting software. FreshBooks is offering a 30-day unrestricted free trial to our listeners. To claim it, just go to freshbooks.com/invest and enter Invest Like a Boss in the How Did You Hear About Us section. Welcome to the Invest Like a Boss podcast.
I'm Sam Marks.
And I'm Johnny FD. We're self-made entrepreneurs who invest our own money and use modern technology to invest like a boss.
Join us each week for exclusive interviews with our network of modern investors, business owners, and multimillionaires to discover new ways to invest our hard-earned cash.
Hey guys, it's Johnny, and welcome to episode 64 of the Invest Like a Boss podcast. I'm here, Sam Marks.
Johnny, hey guys, welcome back, and another new week, another new episode, and another new topic, Johnny.
Yeah, I did not think I would be diving deep into options any time ever in my life. I think I've always heard the terms, but I always assumed it was something that people did on Wall Street, and it wasn't really something that a sit-at-home investor would ever look into.
Yeah, derivatives, options, all these new terms, things that we always thought were too complex. And I don't think I ever would have been interested in it until we had on MJ DeMarco, who turned us on to a few new things, actually. And one of the things that he said he was doing now that he's super wealthy, more or less retired, but, has a nice lifestyle, still active, is that he was trading options. Specifically, he was selling options. I believe he was selling puts. So that got us super interested in, and we looked for the very best person we could find in the option space, and that was the head trader and founder of OptionAlpha.
Yeah, so if you guys haven't heard that episode, it was episode 57 with MJ DeMarco, and I was also surprised when you asked him what he's investing in nowadays, and he mentioned options. So I'm excited to learn more and kind of really just dive in deep on what option trading is, and also how you can use it to create yourself a stream of income, because I think that sounds really exciting to me.
Yeah, so the way MJ DeMarco said he was doing it was he was essentially selling insurance. And I've talked to a few people about this, and we're definitely going to get it into the episode with Kirk. But we're going to talk about specific strategies. We're also going to talk about ways that you can go full time in trading options. And there's a lot of people that are doing it. Kirk Du Plessis is one of the best guys in the business. He's been doing it. He's a super smart guy, Ivy League school, been on Wall Street, done all types of things in finance. So you're definitely going to want to hear what he has to say, and he's making a killing trading options full time.
Well, let's do it. Here's Kurt. Hey bosses, if you are self-employed like we are, and especially if you hate dealing with numbers, invoices, and reminders, you need to check out FreshBooks. They made my life so much easier by letting me set up recurring expenses and invoices that I can set up once and just forget about. You can set up automated late payment reminders as well. So next time somebody who owes you money doesn't pay, they automatically get a message so you don't have to chase them down or, worst off, forget to get paid. Seriously, if you're a small business owner or a freelancer, check out the service. It's super easy to use, and it's free for the first month. FreshBooks is offering a 30-day unrestricted free trial to our listeners. To claim it, just go to freshbooks.com/invest and enter Invest Like a Boss in the How Did You Hear About Us section.
Everyone, welcome back. We have Kirk here on, who's the founder and head trader at OptionAlpha. Kirk, thanks so much, man, for joining us so early your time. I feel bad.
No, I'm good. I like this. The early shows is the best.
All right, good, man. Well, for all the listeners, it's 6 a.m. Eastern time, and that's where Kirk is, and I am in Asia, so it's 5 p.m. my time. Actually, when you suggested the times, I'm like, are you sure? Is that a late night or an early morning for you? But
no, it's actually kind of late. I've already had 2 cups of coffee, so I feel good. I feel really, when you got 2 girls, you got to get up early.
Yeah, it's just how you got to do it, I suppose. Make your little bliss moment in the morning. And do you get any at night, or is night exhausting for you?
Night is done. Yeah. After 2 girls all day and everything else, 9 o'clock, I'm out.
Cool, man. Something I hope to experience pretty soon, but no immediate plans. And man, a lot of our listeners already know who you are. You've been a very highly recommended guest to come on the show, so super pumped to get you on. And maybe just give us a quick brief about you for the listeners who haven't heard of you or OptionAlpha.
Yeah. So, well, hi, my name's Kirk. So I got started, out of school. I went to a top school in the U.S. and got a finance degree, did what everyone else, did at the time. I mean, all my friends in school were going to New York and working on Wall Street. I had no clue what I wanted to do, honestly, looking back on it. And so I said, well, sure, I'll do that too. And so I went to New York. I worked for Deutsche Bank. I was a mergers and acquisitions analyst, and I got a rotation on a trading desk. So that's where I got like that side of the business, I guess, or at least a little glimpse of how that side works. Shortly after that, decided I did not want to work 90-hour weeks and, wanted to see sunlight and the trees and weather, and moved to DC and worked as a REIT analyst for BB&T Capital Markets covering REITs. So I got to see that side of the business. So I jumped over the Chinese wall and saw that side. Again, realized I didn't want to do any of that stuff, and most of that stuff is pretty much garbage anyway. And during this whole time, I've been, learning how to trade by myself and, making mistakes and stuff like that. So after BB&T, I decided to go at it alone. And by that time, I had been engaged with my wife, and she was supportive enough in, in her endeavors as a teacher and, in school and stuff to be able to support me, doing that, and financially and mentally support me doing that. So that's when I started trading. And right about the same time, I started OptionAlpha basically at that time. And it was just like a side blog, really, just to talk about what I was doing and, keep track of my own thoughts and, commentary on the market. And it's just, kind of grown from there. I mean, it's always been a word of mouth, slow grow, and I always say, people always say, in the shadows, you seemingly come out of nowhere, but, we've never really promoted it. We don't do advertising. We don't sell advertising on the website. It's just been a very organic thing that we've had. So now it's been almost 10 years that we've been doing that.
So cool, man. And when you say trading, do you mean specifically options or all types of trading?
Yeah, so I got my start, getting a finance degree, you do all the traditional valuation stuff. I mean, I was in the valuation space, right? So I thought that I knew, all these hard valuations of companies, and I could run these, analyses and use my Excel spreadsheets like a wizard. And then you get into trading, you realize either A, you don't have enough capital to really make it work, or your long-term horizon's so long-term that, you just don't have enough time to see if that's going to play out or pan out.
Yeah.
So I kind of stumbled into options because I got a taste of options on a trading desk, and that's what we would do. We trade options on the trading desk in New York. And so I understood, that side of the business from the institutional side, but not from the retail side. So I tried everything. I mean, honestly, I feel like I was the guinea pig for myself. I tried day trading. I tried swing trading. I tried, penny stocks for a little bit, tried Forex, and, lost sleep doing that. I tried everything. And I really, really found that options for me and my personality fit really well because it's more of a math based thing. It's, more of a probability based thing. It's building a system in a business versus I think a lot of the other stuff, not that people can't be successful doing it. I'm sure that they can. I'm not knocking on anyone, but it's really hard. I mean, you got to have a lot of stars line up to be successful at some of the other stuff.
It's so funny. So I'm in Asia right now, and I just met up with my buddy who knew more about options than anyone in my close network. So I'm like, hey, let's meet up. I need to get a little bit of base understanding for this stuff. So we're going over some kind of elementary option stuff. And he's like, you got to be really careful with this stuff because they always say, we're sitting here trading options, but who's on the other side? It's like MIT and all these super, super smart calculus graduates. And that's you. You're on the other side.
Yeah. Well, I guess I don't know. I mean, I think it's more logical based than people think. And I think that's, people got to get over the terminology when they first get into it. But once you get over the terminology, I mean, it's very much like many businesses are run, like casinos and insurance companies. It's the same underlying fundamentals. So if you can understand the math, and it's not, calculus or, all that stuff, but, it's just pretty simple math and statistics, probability, expected theory, all that stuff. You can understand that. I think you do okay.
Good stuff. I mean, that's been my biggest hurdle just diving into this for about a week before this episode was just the terminology. I'm like, my brain is just over processing and not able to cram it all in like you can for a college test or something. I just couldn't absorb it all. So I'm slowly getting there, but I think that is a big hurdle when people start hearing all these different terms. Immediately they're just like, wow, that's too much for me.
Yeah.
But as soon as you have that basic terminology, then it becomes much more logical, I guess.
Yeah. It's like anything, right? So totally different language. Once you understand the language, everything else falls in place.
All right. And how much of your time right now is actually trading for your own sake and running OptionAlpha and all the material that you guys have?
Yeah, I always tell people I selfishly run OptionAlpha to keep myself in check. And I honestly do. Like I've got, like when I started running OptionAlpha, it was more of a journal for me. So I blog and, like way back when, I mean, the blogs, Air Figures quotes were like sometimes 10 sentences, sometimes 2 sentences. Right. And, but it was just a way for me to keep myself in check and, to have some sort of accountability. And now I've got, almost 60,000 people keeping me in check, right? Yeah. So that's why I do it, and, on this, like still today. But I've never really spent a lot of time trading. Like, and I don't think you should. I mean, in the way that I think, about the markets, I think you should have a, system in place, whatever works for you, have a framework that you follow. And, get into the market, do what you need to do and then get out. Like, I used to spend time like watching the news all day. And when I was trying to day trade in the early days, like, watching every chart, I mean, that's tiring. Like I've got 2 baby girls now and, like I watch them full time at home. So I don't have the time to do that anymore. So, most of my trading is, maybe 30 minutes in the morning, 30 minutes sometime in the afternoon between naps and, the park or pool or whatever we're doing that day. And that's really it. So I don't spend that much time trading on the OptionAlpha side. I spend a lot of time on like courses and content because I like doing that stuff. And, I'm always trying to improve it. New research that we do from, our back testing and our development team, we try to just redo stuff. And so, sometimes that means that, what was applicable, 12 months ago may have a tweak now. And so we go in and update. But we've got a pretty good team in place, that we've built and so it's not too much time on my end anymore, which is good. So most of it's pretty automated.
It's refreshing to hear what you said about time commitments and trading, because I think we grow up, of course, privy to or close by Wall Street, or we all have friends that went and worked on Wall Street. It's like your story. They're working 9 hours a week and just burn out looking at prices all day. But it's cool to hear like, you can win and you can be competitive and you can do this full time and literally be only putting in an hour and a half a day or less.
Yeah, I think it's totally realistic. I think you have to build it from the start. So like I tell a lot of people who get started in this, people email me and they'll say, Kirk, man, I've been really, trading really hard. I've been doing like 3 hours a day. I'm like, 3 hours a day? You're killing yourself. Like you need to learn how to do it well in, 30 minutes or an hour and then really take a step back. So, I think the reality though is like 30 minutes as a retail trader, right? I mean, I'm not talking about the institutional side, but as a retail trader, like we just have to be, religious and consistent, and that's how we end up doing pretty well is, we try not to think we're too smart. We try not to pick direction too much. Just be religious and consistent with your strategy. And that more so than anything else plays out, right? It's just like working out or eating healthy. I mean, it's like the best analogy is fitness. Like we all know what to do. We just actually have to do it. You got to go to the gym. You got to eat right every day, right? That's the hardest part about doing it.
That's all, man. I can't wait to dive into this stuff. I have literally so many questions, but maybe we can start just thinking a little bit on the risk side. And we've done an episode on Forex before, and I just read a stat that said 95% of people who try to trade Forex lose money. I don't know how close that is to being accurate, but would you say that trading options is easier or harder in comparison to Forex?
I think it's harder on the outside. Because Forex is so simple, right? I mean, like as it's like basis of actually making a trade, people understand stocks and Forex because it's a one-way directional move, whereas options is cubic, right? You have time, you have volatility that's factored in. So it's not just a simple, equation of the stock or the, currency pair goes up or down and then I make money. So that I think on the outside, it seems more complicated. But the reality is that it's a much higher probability of success if you can build it that way, right? I mean, options is something where, I mean, not to use like the classic pun, but you have choices. You can choose your type of strategy. You can choose the direction, that you think the market's going to go or not. You can choose your probability of success that you want to have on a trade. And so all of that stuff is kind of baked in, and you have this balancing act that, you have to make decisions based on your own risk profile and, how much you want to trade and how much you're willing to lose or gain or whatever the case is. And I think that creating more choices seemingly makes it more complicated, until you dive into it a little bit more. On the stat, I mean, I've heard the same thing on stock trading and on options trading, 90% of people lose. I think it's more than 90% of people quit, really, honestly. And so if you throw those people in the category of lose, then yeah, sure, maybe more than that, start and, quit within 5 months or 6 months. But from what I've seen, if people really, stick with it, and again, like I hate to use like the fitness analogy, but it's the best analogy for this. It's like we all know what to do. Like I can teach you how to go to the gym and work out and eat healthy, just like I can teach you how to trade options and what you should do in, certain situations and how you should, use position sizing to your advantage. I could teach you all that stuff, but ultimately you have to do it day in, day out, like month in, month out. And it's a grind. I mean, you got to do this for, 5 years, 10 years if you really, really want to make a go with this. It's not a 6-month thing. And I think too many people jump into it assuming it's a 6-month thing and not that they're really trying to open a business, which is how you should think about it.
Gotcha. So there's all different types of terminology when we're talking about options. So we can't get into all of them, but is there clearly a most common type of option that is traded every single day in terms of volume?
I mean, options are traded, and then we don't know like what the distribution of spreads are really, right? Because in options, you can trade one contract and buy, sell one and buy another, right? And you can do that in multiple legs. So you could be in the same position and have 4 or 5 different strike prices and legs, some long, some short. So we don't always know exactly what combination people are doing, but obviously most of the time they're trading calls and puts, which is just the two basic, styles, I guess. Mm-hmm. I would think that most people trade spreads, for the most part on the retail side. Institutions, though, they're going to be, just single leg options depending on, whatever they're trying to do. If they're trying to hedge a position, or if they're trying to, add some risk to their portfolio and take a really, long bet, something like that, they might do that, just single leg options. But I think most of the retail traders like me and you would trade spreads.
Okay. And so there's all different types of reasons that one might want to trade an option. But I'm thinking that the two primary ones would be either wealth preservation and or hedging, and then also generating income and trying to do this, generating an additional income stream or doing it full time and making it your primary income stream. Is that kind of the two major ones?
I think honestly people get into it mostly for speculation, right? Like whether they consciously say it or they subconsciously believe it. It's like I honestly believe that a lot of people get into it because they think it's going to make them rich overnight, right? And we know that, well, obviously you could just have a lottery ticket that wins really big, but is that going to really, consistently happen? Probably not, right? So I think people get into it mostly for speculation. I think people, what they ultimately want, like deep down inside, they want income and consistency, which I think is where it's definitely where I am, and that's where we found success is, being the income generation thing consistent, your slow ups, slow downs, like steady curve, et cetera. I think on the institutional side, it's more of a hedging thing, right? More of a hedging and sometimes income generation where they will sell covered calls and covered puts and things like that. So I think the retail side, though, is speculation and income mostly.
All right. Well, I want to focus a little bit of time on people that can do this full time and have the ability. I've learned how to do it full time. Touched on that a little bit earlier in this episode. So many of our listeners are like looking for a way to do investing full time, to take their passive income, reinvest it, or to learn a new skill. So for the people that are trading options full time, is there kind of a common strategy in terms of which type of options they're buying and selling? Do most people that are doing it full time to support themselves, retail investors, do they all generally follow a similar strategy, or is it really run the gamut of all types of different option trading? Well,
so I'll tell you this. I've seen guys who have tried to, and look, I've been doing this almost 10 years, right? So I've seen a lot of people, like with their strategies, and I've worked with hedge funds. I've worked with, billionaire investing funds. Like I've worked with all these types of people. I can tell you that I've seen the people who try a long strategy approach, right? Like a long option buying strategy approach where they buy cheap options and almost like lottery tickets. They're not exactly lottery tickets, but the hope is that these, cheap investments pay out big. And sometimes they do, but they come in really big waves, right? So it's either a huge payday, but then followed by a huge period of drawdowns and just like money going out the door. And so if you can withstand those big waves, maybe that's something you want to do, right? The reality is, though, is that I don't think anybody wants to have that, right? Where you have this huge maybe influx or, huge outflow followed by a huge influx of cash, right? It's just not consistent enough for most people.
Yeah.
They'll quit before they actually get to that point, right?
That's like the college kid living off adrenaline. Like, I
It
just
totally
heard
is.
about option trading. Let's give this a try.
Yeah, it totally is. And so, like one of the things that I think it was back in, I forget what the episode is. Actually, I have it up on my computer, but it was with Todd Tressiter, which I love. Todd was on our show. I think it was 54 of your guys' podcast. But I think he mentioned like briefly like sequence of returns. And that's what people really don't understand is like in that scenario, yes, you could make it big, but man, you might have to go through like a huge sequence of drawdowns that ultimately pigeonhole you into, like a really deep hole of, drawdown and you'll never recover from that. And people don't understand how important your sequence of returns is. So I think it's a plug for him and for that show.
Right.
I think it's a good show.
Good man.
But, yeah, so I think that, I think most people go on the income side of things. So option selling, that's definitely where I focus. I mean, I think numbers wise and math wise, it's been proven everywhere. So not just with us and with our research that we've done, but anywhere you look, I mean, there's definitely a volatility edge or volatility premium in the market. And it's no different than insurance. It's no different than like I use the casino analogy a lot. There's an edge built in, and that edge is only present after you make a lot of transactions, after you make a lot of trades. And so most people that we've coached that have done that, most of the guys in our group, do pretty much short premium positions, short volatility. A lot of what I do is straddles, strangles, iron butterflies, iron condors, and they're all just basically one and the same. They're all, virtually cousins of each other in the same family of just selling option premium, collecting a big premium up front and hoping to buy it back later at a cheaper price or have it expire. Right. And so I think that's really, if you really want to be in the income generation business of this, that's where you have to be, no doubt.
So we had MJ DeMarco on, who's the author of Millionaire Fastlane, about 4 or 5 episodes back. And what really got us interested in options is what he said during the episode, which caught us totally by surprise. So I was like, what are you investing in now that you had your big exit, you got your best selling book? What are you investing in? He's like, well, one of the things I do pretty regularly, and it was kind of the same narrative as you. He's like, it only takes me 30 minutes a day or something. He's like, I sell options. And I didn't have any knowledge of what that even meant. So I couldn't dive in deep, unfortunately. But he basically said, he's like, yeah, it's the way I do it, it's very conservative. It's essentially like selling insurance. And he's like, I'm making, 5% returns a month or something, maybe even more than that. But unfortunately, I didn't know enough to ask him about that. But what would that mean? What type of option would that be that is quote unquote selling insurance to people?
Yeah. And so any option contract that you would sell, depending on your price and your strike, is like selling insurance. You're basically, your risk reward that you're trading is, you're taking in a premium upfront, which is fixed, right? So you can't collect any more than that premium. And the risk is that you'll cover the position if it goes well beyond your strike price, right? So if I were to sell, like if the stock's trading at $100 and I sell a 105 call option, that means that anything beyond 105, I've got to cover dollar for dollar on the stock, right? If it doesn't get to 105, then I keep the entire premium, right? That person paid me. So if that person is short, stock at 100 and they just want to say like they want to protect their position if it goes beyond 105, right? So they can hold the risk between 100 and 105. Then they'll buy protection beyond 105 and they'll buy from me. And so I'll self-insure them in so many ways. I'll ensure that if this position goes beyond 105, I'll cover it, right? If it doesn't, then they've paid insurance premiums, right? They've paid a premium to, get coverage, but they didn't need it. They didn't use it. And it's just like insurance in every business. If you pay the premium and you don't use it, you can't come back to the insurance company and say, well, that didn't work out. So can I get my premium back? My house didn't burn down, right? If you actually read, I don't think enough people actually read Buffett's 10Ks and 10Qs. Buffett's a huge options trader and a huge believer in selling premium, volatility, all that stuff. And he talks specifically in a couple sections on 10Ks and Qs about why he sells options. And he sells it for this volatility premium, which he relates very much to insurance premiums and how actuaries determine, how much or what the probability of somebody dying is, their house burning down, their car getting wrecked. And then you price in some premium above that level. And that's exactly what happens in the options market, is that a premium is priced in above that level. So if you want to generate income, that's the long-term route you have to go. Now, of course, a house is going to burn down. Somebody's going to die, right? Like, to use the insurance model, like, you're going to have stocks that go really, really far against you. And so you just have to understand that that's part of the business, right? It doesn't mean that the system's broken. It doesn't mean it was a bad trade. It just means that's how the numbers shake out. And so like what I teach people is, if you want to survive that business, just like you want to survive an insurance business, you have to keep your position sizes like super, super small. Okay. And I see a lot of people go into this thinking that they know it. Airfinger's quotes again, like they know what's going on, and then they over leverage early on and blow themselves up.
And how does the leverage actually work in options? Like a typical, is it every single option levered is inherently, or do you add leverage to that?
Well, I think you can do it like a couple ways. Like, I mean, obviously every contract controls 100 shares. So let's say like 99% of them. There's some contracts out there. They started rolling them out, I think a couple of years ago, where like one contract controls 150 shares. Then you've got some of these mini contracts out now that are, being rolled out by the exchanges where it controls a smaller number of shares. But generally speaking, one option contract controls 100 shares or leverages 100 shares. But the leverage can be done in a couple different ways, because on a traditional sense, if you're an option buyer, you only pay the premium of the option contract. So you don't have to put up any other money. So it's like buying insurance, right? When you buy insurance, you just, pay that premium. You don't have to put up any more than that. Mm-hmm. The insurance company, on the other hand, has got to have capital to cover your loss, basically. And in the options market, most of the time it's called margin, right? Depending on your account and stuff like that. But you got to put up margin if you're an option seller. So if I collect $100 in premium, I might have to put up in margin $1,000 or, $1,500, like depending on the stock and how likely it is that I'm going to lose money or whatever the case is. So they require that you put that money up front and hold it in margin so that, you can cover any losses from that contract. So I think that's where people get really, like pigeonholed, is they put up way too much money in margin per position, right? Mm-hmm. They really like go aggressively into a position. And then something bad happens, because it inevitably will. And then they have to, basically cover this big loss. But some of that can be mitigated, though. I think the thing is that that's single naked options. When you trade spreads, I might like to use our example before, and hopefully people are following along on this. So I apologize if not. You can go back and rewind and listen to it again.
That's right. We love those episodes. We listen to it four times in a week and still writing down notes.
Exactly. So like, to use our example before, if you have a stock that's trading at $100, if I sell the 105 call, right? Maybe if I just sell the 105 call for, let's say I take in a premium of $100 just to make it easy, right? If I do that, maybe I've got to put up margin of $1,000. Well, maybe I don't want to put up margin of $1,000. So I go out in the market, I take some of my $100 premium and I buy a 107 call option, right? So now I'm an option buyer to somebody else who's selling the 107. But my goal in doing that is not to speculate on the stock going above 107. It's that so my margin is capped at maybe $200, right? So now my margin's capped at the difference between the strike prices. So that's like one way. I know it's like hopefully not too complicated for people to follow along now. And obviously we've got free training and stuff you can watch, but that's the way that you can use spreads to kind of control your risk. And so I think that's why people like using spreads, is they can do a combination like this and determine before anything happens, like how much they're really willing to lose and how much premium they want to take in.
So one other person had mentioned to me when I started talking about options, and I'm not sure the terminology of the option. I think it was selling a put, but he said he equated it to, it's like picking up pennies in front of a steamroller. Does that sound like it's selling puts or maybe something else? And I don't even know where that comes from. If it's like,
honestly, I honestly, I would always challenge people to be, to like show me the data and research that shows that consistently doing that is like picking up pennies in front of a steamroller. It's a common saying and I hear it all the time. But look, the reality is that we've done so much research on this. So we built a software and technology that basically has the ability and has already done 21 million back tested strategies, right? So like we've got as much data as you could possibly imagine. That's why hedge funds and financial institutions come to us, because we have data on all this stuff and we can run a lot of, scenarios. And the reality is that if you like even a put selling strategy outperforms the market, and that's not just something I'm saying. I'm saying check the CBOE, the NASDAQ, check all these different sources, Harvard studies, Stanford studies. You'll see that like even in that case, a put selling strategy can outperform the market with less volatility. So do I think that you are collecting small premiums and one day you might have a big drawdown? Of course, but it never overshadows the small premiums.
So what is the steamroller in that scenario? Is that you have to cover an option and the market's tanking?
Yeah, that's a market tanking and your short put option, right? So let's say you're selling a short put and you collect $100 every month, right?
Mm-hmm.
You might have one month where you lose $1,200, right?
Okay.
And that's what people think. They're like, oh, 1 month is going to wipe me out, but it's really not in the long term. Like in the long scheme of things, right? It's not going to knock you out, but you've got to have the, the consistency and persistence to keep going with it because that's what it is. So it's like an insurance company selling insurance on 10 houses and one house burns down the first month. Right? Does that mean that the insurance business is broken? No, it just means that they had a bad, like that house burned down. Like that's going to happen. It just happened early in the cycle, right? So you got to deal with it. You got to still keep, you got to keep selling insurance basically.
Gotcha. And is there more volume typically with lower priced stocks and or options versus something like Amazon that be massively expensive to cover 100 shares?
Yeah, so I think it depends on the security. I think like in that example, because that's a good example, you could probably have the same volume in something that's a $20 ETF as in Amazon and Google, which are multi-$100 stocks because they're very popular. And that's honestly why some of these exchanges have come out with these mini options. I think it's like, I like the concept. I think it's bogus because they don't charge a mini commission. They charge like the same commission for these options, even though they're much cheaper. But yeah, that's why they've come out with these mini options because then people can get into them with less capital. But Amazons and the Pricelines, the Teslas, the Googles of the world, all very, very liquid, lots of, volume, lots of activity, even though they're higher priced. So I don't think it matters that much.
Cool. So I was trying to like kind of get my own head around what it would take for someone to do this full time. And let's just say full time is, let's just say it's $6,000 a month of income. And there's so many different variables, I'm sure, and so many different ways you could approach it to try to get that type of income. But I'll just share from my own experience because I was trying to place my first option trade two days ago via E-Trade, which I know you're not a big fan of. I want to hear more about that. But I had to apply to get an options upgrade to be able to do it. But what it was I own Tesla stock and I'm interested in buying more Tesla stock. So it was just trading at like 312. I think it maybe got down to 308. And there was an option. I think it's called selling a put where I could buy that and the premium was somewhere around $1,400. And the strike price would have been $300, which I'm more than happy to buy more Tesla
stock.
Yeah, more stock at. So I'm like, well, this is win-win. It's almost like, I'm getting paid $1,400 if I don't get it. And if I do get it, it's at a price that I'm really happy about and long-term anyways. So I was super, super excited to put in that. And essentially, if that's $1,400 on the premium, if you were to place 3 or 4 options trades in a month and you collect a premium on all of them, that's $6,000 right there.
Yeah. Yeah. No, and that's the thing, right? It's like the margin that's required to cover that position is probably not $1,500, right? So as long as you have the margin to cover that position, then yeah, you could do, pretty well. So I know like one of the coaching clients that I have is a lady who got a huge inheritance, right? Like she just like fell into a bunch of money and had no clue what to do. And I've been coaching with her now for like over 2 years, right? And she's trading about 3 million. And last month she did 80,000. Now I think that that's probably high to be honest. Like
she made 80,000.
She made 80,000 trading options.
Boss, big boss.
And she knows nothing. And she knows nothing about, she knows now, but like coming into this. And I think that's the best when she had no preconceived notions of the market. She had no preconceived notions of, how to invest or how to not invest. Now, look, honestly, I think like 80,000 a month is probably a high run rate for her, right? So I even told her then, like, hey, you had a really good month, right? Like you'll probably have, like some sort of drawdown along the way. It's just mathematically like there. It's going to happen. Like statistically it's possible. And so I think maybe, 50, 60,000 may be a better range for her to settle into. But like to give you a range of where you could be, that's where you could be. So to use your like money of like $6,000 a month, I think you have to have like somewhere between, for like 4.5 or 5, 4.5 to $500,000. Like I think that that's a realistic target of what you should honestly have if you want to generate that income.
Okay.
I don't think it's a $30,000 account that can generate $6,000 a month. It's totally unrealistic, not sustainable. You can't handle drawdowns. You can't handle the longevity of it. And honestly, I hate that people are out there like spouting that. Like that's unrealistic to think you can do that with, $40,000 or $50,000. Does that make sense? Like,
yeah. So it's not an exact correlation to how much cash and capital you have. But there is the more that you have that you're trading, the more earnings potential that you have. So in your example, with the lady, 3 million, she's generating 80,000. if you had 500,000, you could realistically look at making 6,000 and kind of, some range in between there as you go up or down in terms of cash.
And I think the thing is that when you have more capital, you'll be more conservative with your capital, which you should be anyway. But when you have more capital to invest, you can just handle the larger returns because you can handle the fluctuations in the account. When you've got a smaller account, like I tell people with a smaller account, like shoot for like 10%, like on the high end, right? Maybe even 5% initially, because you don't want to blow up your account. You want that sequence of returns to be very steady early on, because a 20% drawdown with 10 grand, like that could kill you for a couple of years, right? And so with a larger account, you can kind of handle, $20,000 loss on your way to, doing, 15, 18%, something like that.
When you say 5 or 10%, do you mean yearly or monthing?
I'm talking like yearly.
Okay, cool.
I'm talking slow and steady.
All right, good. I'm like, oh man, 10% a month. Now I'm going to start doing all my stuff different.
No, I don't think it's realistic. I think too many people are spouting, stuff about that. And look, if I'm the first person that's ever come on shows and talk about that and, get people back down to the ground, but I think a realistic expectation when you start really scaling your account is like somewhere between 15 and 20% a year. That's where, you should live. Like I live in the 18%, range. That's where I've been for about 10 years. So I think that, that's the range you should live in. I know you can shoot higher. So I'm not like discounting that you can go higher than that. But again, the question that people really have to ask themselves is, can they stand the ebbs and flows that come with, a 30% return a year? Because you may have a 40%, 30% drawdown on your way to getting, there. And can you still trade after that? And I don't think most people can do that.
Okay. So is this lady that's made 80,000 a month off 3 million, is that kind of the most of an individual that you've heard making in a month, or have you heard of bigger and crazier stories?
Yeah. Yeah, I mean, like I worked with a billionaire hedge fund in New York. I mean, they did much more than that, obviously, but they did a lot of index stuff, and they had to, go out in the private market and do some more stuff that wasn't public market. So obviously, I've heard of companies doing more than that. From an individual side, I think she's probably one of the better ones that I've heard for sure.
So I invest in a managed Forex fund, if you will. Is there the opportunity to do that in options? Like, I mean, if you're aiming for 18%, but you're not interested in actually trading the options yourself, are there funds out there that you can get in that have exposure to this?
Yeah, there's a couple funds out there. I don't know who still does them. I don't follow that space, too often, but I know there's some out there because I know we've had clients that have either A, gone into it, or B, pulled money out of it and they try to trade by themselves. So they're definitely out there. I think they're more for the accredited investor side. So I think it would be the only thing that people have to be cautious of. But yeah, they're absolutely out there.
Cool. So you mentioned that you're spending about 30 minutes in the morning, maybe an hour and a half a day doing this trading. How many trades is that, would you put in, say, a week or every single month?
Yeah. I mean, I try to get on as many as possible, right? I mean, that's realistic. Like I try to get on as many as possible, but the markets don't always cooperate with what I want. So like yesterday we did 5 trades. We did 2 opening and we did 3 closing trades. Is that a typical day? Probably about typical day. Sometimes we'll have 10 trades in a day. Sometimes we won't trade at all. And I think it just depends on the season, the volatility. It depends on, where I'm at. Like last week I was traveling in Denver and hiking in, the Rocky Mountains. So me and my wife were out there and, I didn't have a chance to trade for 2 days, and that's okay. Right. And so, I kind of have to make more trades now and, kind of catch up a little bit.
This should be the fun part, but I'm very curious as to what type of software is available to kind of optimize this type of trading, because it would seem like you mentioned you were originally doing stuff in Excel and stuff, but there has to be so much software that can really help automate and put a systematic approach to this.
Yeah. So I think, I'm licking my lips here and chops because we built a software to do this and it took us 2.5 years to do. So I'm not I say this to plug our software for sure. So full disclosure, but also to say that I've looked for many, many years for something that does what we built. And so, I think there's obviously, the broker platforms now are catching up very quickly to most technology. I think the options industry is still very far behind, traditional, fintech and, the whole technology wave that we've gone through. So brokers aren't catching it. They're not rushing to catch up with it, but they're doing a good job of it. And so most broker platforms are pretty good. Like E-Trade, okay, it is what it is, right? I think you could probably find something better. But, there's no real technology out there for the retail trader to be able to like backtest strategies quickly, optimize their trades, like, run them through millions of scenarios and forecast. There's no real stuff out there to do that. Now, do you need that stuff? Not necessarily, right? Would it help? Like, could it take your, a 15% return and turn it into a 19%? Or could it increase your win rate from 60% to 72%? Yeah, for sure. And that's why we built it. So, we built a technology that allows you to optimize trades like on the fly, backtest in seconds, to really see like if the trade that you're going to put on works or not. And I think that that's something I've wanted for a long time. And now we have the ability to do that. I know that other people want it. So again, it's not something that's needed. It's not necessarily required, but if you're the type of person that you want to see some numbers before you put money at risk, then I think there's some good stuff out there. Now
that's so cool.
Not the only one out there that does it, but I can tell you this, like I run OptionAlpha as more of like a crowdsourced platform, meaning, like we obviously can generate, income from our membership and from our software, but I pretty much run everything like very close to cost because I believe in, like giving a ton of value and eventually it all coming back to me. So there are other technologies out there that I think are way subpar compared to what we built. Mm-hmm. And it's ridiculous how much you have to pay per month versus our software is just like a one-time fee and you're in for life. Right. And I think that there's something to be said about that.
So what's like the most simple example of how the software would work for someone like me who's never placed an option trade before? Can I essentially get in there and say, okay, I want to make this, I want to sell this put on Tesla, and I plug in a couple of variables and it tells me what the win percentage would be?
Yeah. So there's two parts to what we built. We built a back tester. So you can go in there, you can choose your strategy that you want to trade, choose all the variables, delta, strike width, per allocation in your portfolio, stop loss level, profit taking level. I mean, everything, like how often you trade. Are you trading daily? Are you trading monthly? Are you trading, sequentially, which just means one by one? Like, how are you trading even, at that level? And I think that that's where, like nobody in this industry has done that type of analysis and like giving you tools to do that. And that's what took us a long time to build in. But then you can literally run a back test and immediately see what the results would be. And so you can change one, trigger or one entry and say, okay, well, if I'm not going to trade weekly, so like once a week, what if I trade once a day? Like, how does that change the outcome of this strategy that I built? And so in 2 clicks, you can then rerun the whole scenario and see like, oh, okay, well, I would have made more money or I would have made less money, or here's what my win rate would have been. Here's what my CAGR would have been, my Sharpe ratio. That type of stuff is like wicked analysis that we can do. The next part of that is then trade optimization. So what I wanted to know though, is I said, okay, all that backtesting stuff is cool, but like, let's look forward. So if we were to run, like if I was looking at a scenario right now, and let's say I'm bullish on a stock and I plug in, how many days till expiration the option contract is, and I plug in where implied volatility is, and I plug in what type of account I have. I want to know just like what is the best strategy for me to trade right now. Like I can run a bunch of back tests, but I want to know at this exact moment in time, with this current market condition, what is the best trade that I should put on? And so we built technology to give you that ability to do that. So you can plug in the market data, like days until expiration, volatility, if you're bullish, bearish, what type of account you have. And then you hit optimize and it gives you a list of like the 10 strategies that are best from millions of scenarios that it like ran in the background, like forward casting everything and saying, okay, this should generally work going forward in the future, or this strategy should work. And it tells you exactly how to set it up. It's literally dummy proof. I mean, it really is. Like that's what it's meant to be. And
that's awesome.
Does that make sense?
Yeah, that is awesome, man.
It's wicked.
That
it
is so
cool. I get giddy about it. And I've been like working on this for 2.5 years now. So yeah, I like love it because I go in and I just say, okay, this is the market scenario. Boom. And it tells me like, it gives me a list of 10 because I don't want to give everyone one. There may be win rates that you favor more than others. You may care about, return versus Sharpe ratio. You may care about drawdowns versus somebody else may not. So we give you a list of the top 10, but then from there, it's you just set it up and enter it. Now, the next logical step in this, because I'm sure people are thinking this, is like, how do I automate that? And so we're working on doing that with brokers, but that's the next step is just to have it completely automated.
Wow. So if talking about win rate, if you're a casino, you pretty much the house needs to be, I don't know what the house is. It's somewhere around like low 50s, like 52% or 54 or something.
Depending on the game.
Yeah. What would your win rate preference be when you make a trade? Is it always fluctuate, or is there typically like a percentage that you try to aim for?
Yeah. I park myself in like the 70s range.
Nice.
So I try to enter trades. Actually, I enter trades with statistically what looks like a lower win rate than that, because you can calculate that right from the start. But, one of the things that you would learn with volatility and, like this option premium model is that the initial probability of success, if you let that trade play out over time, you'll actually end up winning more than the initial probability suggests. So if you enter a trade at like a 65 win rate, you let that trade actually play out over time, you'll win at 70% or some margin above that. And that's the volatility premium that's baked into the market. And so I place a lot of my trades just shy of 70, and I try to aim for about 70, percent chance of success on trades. And that's where I want to be. I think if you go higher than that, because I know the question that people always ask is like, well, Kirk, if you can aim for whatever you want, like, why don't you go higher? Why don't you go 90, 95% chance of success? Because the higher you go, the less premium you collect, right? So it's only a balancing act that you don't want to be too close, right? Like it's warm water. You don't want to be too hot. You don't want to be too cold. And so you go further out, you'll have a higher chance of success, higher probability of success, not as many drawdowns, but you're collecting a lot less premium at those further out strikes. And so you definitely want to find that good balance.
Super, super cool stuff. And now most of the people that are doing this full time, are they involved in some type of syndicate and or I'm sure forums, but do they kind of is there like a leader and they're like, okay, let's all make this trade. It looks good. Or is a lot of it just independent?
I think honestly, a lot of people do it independent. I mean, like my goal honestly with OptionAlpha is to teach people how to fish. Like I tell people, and I almost kick people out after 12 months of the program. If they're in and they hit the 12-month mark and they're still a member, they get an email that's like, what's wrong? Either like one thing is happening, like either we're not doing a good job or you're not like applying yourself, right? Because at that point you should be doing this by yourself. Like it's not that complicated to do on your own. You just have to have the consistency and persistence to do it, every day, every month. So I think a lot of people actually do it by themselves. Do they get influence from other people? No doubt, right? And so do I. Like I've got, basically 60,000 members that help me with trade suggestions, right? Like every day I get, a couple hundred people like, oh, look at this, right? And I don't take them all, but some of them I'm like, oh, you know what? That is a good trade. Let's let's get that trade on, right? So I think it's a little bit of both. I think most people, though, if you're trading by yourself, you've got a good rhythm and framework down. You just kind of go at it by yourself.
So one last question on the software. So someone is a total novice. You mentioned earlier that you got to be really willing to commit, 3, 4, 5 years to this. Can they, can someone just starting out really get in and kind of plug in their preferences and variables? If you have the win rate, I imagine that takes a lot of the emotion out of it because you know that the stuff's been back tested. And if you have a loss, okay, if you just stick to the strategy, it should pan out over time. Can someone get up to speed pretty easily without knowing all the complex terminology and different levels of option trading?
Yeah, I think no doubt. I think you can for sure. And we built it with that like type of person in mind that, it would give you all the information you would need to make a trade, right? Yeah. So it would give you your strikes, your profit taking level, your stop loss level, if required. It would give you all of that information. And even more so than just win rate, well, a big one that I like harp on is drawdowns. Like we give you like the average drawdown for different scenarios so that like, hey, if I, have a 20% drawdown, that's expected. Like it's not, we don't welcome it. Like it's not like, yes, I got my 20% drawdown I was looking for, but at least that could, happen in the future. And so it's just that expectation that I think creates a little bit of confidence. But I think it's definitely something you could do. I don't know if I would advise that you just like jump in and start making trades. I think you got to learn a little bit first. But once you understand the terminology and stuff and you believe in the system and you believe in the edge, which you can learn more about, obviously, then I think you just got to get in and make trades because time is not your friend in this business, right? Okay. The longer you can trade and the sooner you can get started, it's like compound interest, right? Mm-hmm. Like it's, like the sooner you start, the better off you're going to be. So start small and scale from there, right? Because you can do more contracts later. Just do one now and learn how the mechanics work, learn how the markets work, and then scale into 100 or 200 contracts, right? That's easy to do.
Excellent advice. So Kirk, just a couple questions in the closing. What are some of the best platforms to trade options? I know I mentioned E-Trade, not a huge fan of that. Neither am I. Are there any of you have any favorite ones or common ones out there?
Yeah, so I'll answer this question because I get it a lot. So if you're international and you want to trade U.S. markets, the best, well, I'll say this, Air Fingers Quote's pretty much the only one that can really do it in a decent way is Interactive Brokers. So if you're listening to the show, you're international, you want to trade U.S. markets, you got to try Interactive Brokers. Now, their platform admittedly sucks, but their commissions are good. But they're the only ones who really do like a broad base of countries and allow you to trade U.S. markets, especially the options market in the U.S. So they're probably the best one in that regard. If you're U.S. or Canada based, or even like UK, Germany, stuff like that, I think the two better ones out there are Thinkorswim from TD Ameritrade, and then also Tastyworks, which was the original founders of Thinkorswim spun off and created their own brokerage called Tastyworks. So I would say those two are probably the best ones on the options side. I've worked with Barron's on doing like the broker survey a couple years ago, and the team that we were at with Barron's did reviewing all the platforms. I think you just really have to be cognizant of the fact that some brokers and some, companies, they want to have an options platform just because they want those types of people in their ecosystem, but they really don't care about improving the system, about maintaining the technology, or even enhancing the technology. So not to knock on anyone, but, some of the big ones out there, they really don't care about, the options people. They just want you in the ecosystem so they can sell you their other products.
Got it. Something just popped up as you were saying this stuff, and I was thinking, is anyone doing option trading for cryptocurrencies that you know of?
I don't. I mean,
that would be crazy, right?
I think it would be crazy. Yeah. I hope it doesn't come out, but I'm sure inevitably will, because maybe, it's a Wall Street product type thing that would eventually come out. But yeah, I don't know if I would ever, I would never probably trade in that market.
Whoever owns 100 Bitcoins to trade is going to, got a lot of money tied up.
I was just say, with Bitcoin moving 20%, I'd love to see the margin that's required on a option trade in Bitcoin.
So Kirk, is there anything else that you invest in? I know you got your hands full with all this stuff, and you're aiming for 18% with your option trading personally. Is there anything else that you invest in or interested in investing in? Yeah,
I do. My wife and I do a lot of real estate. So we've got a pretty decent rental portfolio, always looking to do more there. My wife's, she's a teacher, so she's got a 403B plan, which unfortunately they don't allow me to trade options in. God knows why. They think I'm too risky to do that. Sure. So they only let us do stocks. So I do REITs because I know that business. I was in the REIT business. So, whatever capital we have in her, retirement account, I do a bunch of REITs and just, collect some dividends and go that way. So, for me, it's really, real estate, options. The website obviously generates income now. So that just feeds all the other, pools of money, I guess. But the biggest thing is real estate and options.
Cool. Thanks for sharing that. And for any of the listeners that are interested in starting to pursue option trading, what would you recommend them as a kind of starting point to take a look at material on OptionAlpha?
Yeah, I mean, I think the thing is that everything's free on our side. So if you buy access to software or research, that's always like a one-time cost, obviously. But all of our stuff is free. All of our training's free. It's open. There's no trial period or anything like that. I think that's the way it should be, because I don't need to generate money from that. I generate money from trading, so I can give away all of our content and training for free. So if you want to learn more about it, we've got tons of courses, tons of live videos that I've done doing it, hundreds of case studies. I mean, there's so much content on there. I sometimes get lost in it, right? But it's good to know that it's all there and you can search it and go through, the courses and the modules and tracks. But just check it out and it's all free.
Oh man, Kirk, this has been a wonderful introduction to option trading. It's obviously a very complex category, and I know we're just scratching the surface, but really want to thank you for coming on and sharing this stuff. Super interesting, amazing to hear what you guys are building, and I'm dying to place my first option trade. I just got to get it back on the phone with E-Trade so they can approve me. Pain in the ass, but I guess that's what it is.
Yeah, let me know. We've got tricks on how to get higher approval levels. So if you run into issues, let me know.
I'm just going for level 1 right now. We'll see. I'm definitely going to call you before I make a level 3 or level 4 trade, because I'll probably get burned, get excited one night and after a glass of scotch and try to do one.
Anxious.
Yeah, exactly.
Yep, too anxious.
Cool, man. Well, thanks again for coming on. Good luck with all your pursuits, and we'll be sure to share all of your material with the listeners who I'm sure are very keen to check it all out.
Yeah, thanks for having me. I really appreciate it, and super humbled to be here.
I realized I had no idea what options were until just now.
Are you more confused with options now, or are you more intelligent with options now?
I think I understand a little bit more kind of what the baseline is, but definitely in terms of terms and how much there is to learn, I'm definitely more confused.
It's intimidating, right?
Yeah. And I also like the idea that there are some really good use cases for it, that it's not just gambling your money. If anything, it seems a lot less risky than just buying individual stocks, especially if you're doing it with a system.
So I talked to a few guys over in Asia when I was kind of preparing for this episode with Kirk. Man, I've sat down for 6 hours, 8 hours, 10 hours, multiple different days kind of learning about options. And it's, the guys that are doing it, a lot of these guys are doing it for supplemental income. A couple of them are doing it full time, but they basically said, like, you have to be careful because the people on the other side of these option trades are using really sophisticated software like Kirk's created, MIT groups, people that have really got this stuff down to a science. I started digging into this, man. It's fun, Johnny. It's really fun. Like, I think this could be something that you really enjoy doing, 15, 20 minutes every single week and make a couple trades.
I actually thought about that. I think when I listened to the episode, I was like, you know what, let me check out his course and let me just kind of, get my bearings in. And so first off, his course is really cool. It's just an opt-in, so it's free. There are some paid areas in it if you want to join the forum, if you want to use software and things like that, but there's a lot of free training on there, so that's cool. The downside to it for me personally is it is over my head. Like, it is something that I think that if I really dedicated, and he even says it, I think he says something like, study this 30 minutes a day for X amount of months or something, and you'll be good at it. I don't think I want to study anything for X amount of months anymore. I think, and as far as investing, I think I'm much more of a passive investor. I can see people enjoying this. I can see people that like the math, that like stats, and not even crazy math. I think, that's something that he brought up. That was a good point where you don't have to know, advanced calculus or anything, but this is something that I feel like I would not dedicate to the learning enough to play it safe.
Yeah, I agree. I could see people like MJ DeMarco getting into wealth. Maybe you're kind of coming into your 40s or 50s and you want to do a supplemental income, what seems like MJ DeMarco is doing and a lot of other people I know, not putting that much time into it. Maybe they have a certain strategy that's fitting. What kind of really piqued my interest with this stuff, with talking to Kirk, is the software and how much of this stuff that you might be able to automate. Kind of like when you go into a casino and you're playing blackjack. If you play blackjack long enough and you play by the book, your odds are maybe 48% of winning or something like that. Like, the house is favored, but that your percentage of winning, your chance of winning is kind of going to even out and balance out over time. I think if you have stuff like this that can kind of automate a lot of it, and you have a specific strategy that you like, maybe like selling puts, which is most interesting to me, then it makes sense to do. Like, for instance, Tesla, I sold a put on. I'm always looking to buy Tesla stock cheaper, right? I know you're always looking to buy like VTI cheaper, right? Like, you're putting in limit orders for VTI a lot.
Yeah.
So kind of similar with me and Tesla, only that with Tesla's trading at, let's say, 330, to buy 100 shares, that's going to cost you 33 grand. But I'm happy to buy it, at a 10 or 15% discount. And when I put in my, it's called selling a put. When I put that order in, I made $1,000. So it's almost like if the market tanks and Tesla goes down, or Tesla tanks, I pick up Tesla kind of where I want to pick it up. And if it doesn't and Tesla stock goes up, I make $1,000. I make $1,000 the day that I traded it, which is, that's a good chunk of change.
Yeah, I think in your specific case, I could definitely see that being a smart thing to do. I wonder how that would work with me buying index funds. So, like, let's say I wanted to do the same thing with, 100 shares of ETI. That's something I'd be curious about. If anyone knows exactly how that would work, please comment in the Boss Lounge. You can break that down.
Ching, ching, ching. I'm looking at it right now.
Yeah, did somebody write that down or?
No, I pulled it up literally because I thought it might interest you. So I was hoping it would be more than it is, because then I think it would really interest you. But VTI right now is at 120, 126. So if you sold a put on this for, let's say, August 18th, which is 3 weeks, and you had the strike price at 120, which means, okay, Josh D is happy to buy this at 120. If it goes anywhere below 120 by August 18th, you're going to buy it at 120. If you put that order in right now, it doesn't cost you anything. You're going to collect, unfortunately, only $30. If you put in at today's price, 126, you'd collect $55, which is, it's nothing compared to the Tesla example.
And for how many shares is that for?
That's 100 shares. So you would have to buy, that would cost you 12 grand basically.
Yeah. You know what? I like the idea of that free money, that if I was going to buy 12 grand worth anyways, I might as well do it. But I think the benefit, like the monetary benefit of it is so small that it's definitely not even worth my time trying to learn all this and figure it out.
Yeah. I wonder if a VTI, which is so diversified over so many stocks, must have a lower payout because it's much more robust than a stock like Tesla, which could potentially, go bankrupt next year somehow, some way, right? But whereas VTI is not going to go bankrupt. You might have a drawdown, but over the course of the next 10 years, you're almost guaranteed to have that go up, right?
Yeah, definitely. I would also imagine that, people who buy like options, they're not trying to follow the whole stock market. I guess there are some people that bet on the whole market, but then it's like a smaller risks, smaller benefit versus an individual stock could have big swings, which means big potential money for them to make, but also big potential profit for you.
So it's pretty interesting, man. When you start talking about options, there's a lot of people that have created options before. I even called my dad, and my dad, he doesn't do much trading, but he's traded options before. A lot of people that I've talked to have traded, kind of like me. I've traded 3 options the last week. They've traded a few options. So I think a lot of people have a little bit of knowledge about options trading, but not anywhere in the full-time strategy realm. But it's definitely an interesting topic, man. It's really opened my eyes, and this is going to open conversation for us for so many, future run-ins.
Definitely. I definitely agree with that. And it is cool knowing that there is an option for I'll say almost like a part-time income stream, or maybe even a full-time income stream if this is something that people look at and they're like, this interests me. This is something I can do.
For sure. For sure. Well, you know what I was thinking? We should have an episode like this, but back with the FX boys at RFFX, Brian and Tang, where we really kind of dive into, I think the last episode we covered kind of putting money with them and how they manage the account. But I'd be curious what more people are doing, option trading full time or FX trading full time, and what maybe the success rate of people doing those full time is.
Yeah, that would definitely be interesting because I think there's a lot of listeners that, either they have a normal job, maybe they sold a business, or they just had some savings that they wanted to invest. And like me, because we've had on so many interesting guests and different platforms, now all of our money is invested. So now we need to make more money and figure it out.
So true, man. So true. Getting too excited about too many things. And it's been a funny quarter two, because I think all the beginning of the year, you and I were both kind of like, we've got a lot of money invested. Let's stay at this level and see what else comes around, but we're not planning on investing a lot. And I know I keep putting more money into more things and creating more headaches, but this stuff's all too damn interesting.
Yeah. And I also just feel bad having cash in the bank. So I think I'm at a point now where I'm going to have to let it sit because I don't have that big of a buffer anymore, just in case, I need it for anything. But things like this, it does interest me. And I watched a couple of the modules just because I wanted to learn more. I wanted to see what his course is like. So if you guys are interested, definitely check it out. It's pretty cool. It's really well made. It's OptionAlpha.com.
Yeah, I'm just checking out. Okay, so I was looking to see if the opposite, if you sold your VTI, if you're willing to sell, there's no money to be made in that, basically. So check it out, guys. If anyone else has a lot of option experience, been very surprised in the Boss Lounge how many people have been talking about options, given really good advice, sound advice. So obviously a lot of people know about their options. Let's chat it up. Great to also hear again from MJ DeMarco, kind of opened our eyes to this type of stuff. Really cool to hear people that have not come from a finance background that have made it, through hustle and hard work, and then becoming an author, then figuring out how to sell options. So the knowledge is out there for just about anyone to do it. If you had selling options part-time, please let us know. We want to hear your story.
I love it. Also, I want to give a quick thank you to everyone who's been leaving all these great reviews of the podcast. I'm glad you guys are enjoying it. I'm glad you guys are sharing it with everyone, with your friends, your family, on your Facebook walls. This week, I want to acknowledge Trader CC. He says, really unique, 5 stars. I really enjoy this podcast and the different asset classes. Sam Marks is a really great interviewer. And I agree. So thanks, Sam. Want to acknowledge you as well for being such a good interviewer every single week.
That is the first compliment any person has ever left me in the review box. So if that person happens to be in the same city as I am, they can have their choice of a flat white latte or a glass of Cabernet Sauvignon Blanc. No, it's not Cabernet Sauvignon Blanc. Cabernet Sauvignon at the end of the day.
I like it. Or maybe you even mix a Cavion, Sauvignon, and a Blanc together.
I like it.
Very cool. All right. And a big thank you to our sponsor, FreshBooks. If you guys have an online business, if you're a freelancer, or if you need to collect invoices, go to freshbooks.com/investlikeaboss. And in the how you heard about us section, please put Invest Like a Boss podcast to give us credit for sending you over. And thanks a lot. See all of you guys next week. Bye-bye.
See ya.
Thanks for listening to the Invest Like a Boss podcast. Join our mailing list at investlikeaboss.com to get exclusive access to our insider investment portfolios and our private members forum.
If you enjoyed this episode, please subscribe on iTunes or your favorite podcast app. Tell your friends and leave us a review in the iTunes store. It helps more than you know. See you guys next week.